Hey everybody, hope everyone's doing well and had a good day. This is a recap of the Emini 5-minute chart for Friday, March 21st, 2025. Today we had a gap down, and I'd like to look at the Globex session as we go into the day, especially when there's a gap. If we look, here is what we had going into the day. So back here we had the close of yesterday. We had a trading range which broke out to the downside in a bear channel with a big climactic breakout here from the bears, maybe 3 legs down, 1, 2, 3. This bear breakout may have reset the leg count to some degree. Yes, it might be exhaustion, but this will probably get some sort of second leg down, even if it's only brief and not symmetrical. So with that said, we may have to go sideways to down on the open, but if that's an exhaustion gap, we may rally today. So on the open, it was a breakout mode, open, tight trading range, and we finally got a bull breakout, bar 18. It's a 4-bar bull micro channel, but really, only bar 18 is breaking above the trading range. And look at the follow through after bar 18. It's a bear reversal bar, closing near its low. Not what the bulls want to see for follow through. It's really not follow through at all. Good for the bulls that there's a gap from the high of the trading range to the close of 18 and from the low of 19, but 19 is a warning that this bull breakout is not as strong as it could be, and you can see what happened on the next bar. 20 is a 1-bar second leg for the bulls. It's really the bare minimum. So 18, bull breakout, pullback, we fell below 19 and rallied and tested the high close of 18 on 20. But you can see the reaction on 21. Traders who bought the close 18, let's think of it this way. If you're buying the close 18, you're buying because there's a sense of urgency. If there was not a sense of urgency, if you're looking to buy a pullback, let me back up and let me put it this way. If traders are expecting a pullback, they're not going to buy the close. Because if you're buying the close of a bar, you're desperate to get into the market. You think we're going higher very soon. So the traders who buy the close 18 are disappointed with bar 19. If you buy the close of a bar, especially if you're buying a bull breakout bar, the ideal entry bar is a bar that looks like your signal bar, 18, and then maybe 19 is a big bull bar closing up here. But instead, we got a bear bar closing below the entry price. That is disappointment. And what that might lead to is bulls who bought the close 18 looking to exit at break even at the close of 18. And bar 20 gave them that chance, and it looks like they took it with the reaction we got on bar 21. 21, strong enough bear breakout, second leg down, likely. And the bears got followed through. Where's the target? One target is the 15 low. The bears would like to get to a new low of the day. But here's a swing, a higher low from the bulls, bar 15 low. It's an obvious stop location. And sorry about that. This is something I think Al used to talk about when he would do end of day reviews. I know Brad's talked about it. One problem with 18 is the trader's equation. The risk reward is really bad. You buy the close 18, theoretical stop below the swing point 15. Your one times your risk is all the way up here. And in order to hold that trade, you need to be at least 60% sure we're going to the target before the stop, or at least before there's a pullback. And you get 19, that's disappointing. And really, this is a momentum trade. If you're buying 18 with such a far target, you're betting on momentum. And 19 is a sign that there is no momentum, and 21 is a give-up bar. And at that point, we have an obvious stop location, 15. And this happens all the time in trading ranges. If you're a bull buying here, putting your stop at the theoretical stop location, 15 low, does it really make sense to sell down here? And think about it this way. Are you desperate to sell at the 15 low? Sell to go short, sell out of longs? Are you really eager to sell down here? Probably not. It's illogical. The market just rallied many points for 4 or 5 bars. The odds are when we retest down here, there's probably going to be support. The reality is this bull breakout traps traders, and the traders who are trapped below are looking to buy. You have bulls who missed the rally, looking to buy a deep pullback to capture a second leg. You have bears who got trapped into a losing short position, hoping for a reversal or pullback so that they can exit their trades at break even or with a smaller loss. Strong enough breakout for the bears, second leg down likely. Pullback 25, maybe about 50%, maybe a little less. And then a brief second leg down, 27, but you can see where we tested the 15 low, and then you can see we bounced 28. So really not ideal for the bears. Tight enough channel, we might go a little lower, but in this breakout mode, trading range open, we got the bull breakout, we're getting a pullback, and the bulls are hoping this is a breakout pullback leading to a second leg of some kind. And we had several attempts to break below 15, 27, 29, and 31, and they all failed. We got no closes below the low of 15, and eventually we got the give up. So 31, good reversal bar, 32, 33, really strong bull bars. It's a really great looking bull breakout, probably resets the leg count, even though we're testing the highs here. Because every double top is leg 2 of some kind, but this is strong enough. And there is always that argument. You have to think about the opposite side. What do the bears see? The bears might see bull breakout, deep pullback, second leg trap, really strong looking breakout, but we have not broken out of the high of the trading range yet. And that's fair. So until we break out, this could simply be a buyback test of resistance that fails. But when 34 closes, another bar, uniform in size, closing near its high above the resistance. The reality is traders are not selling here. The market is going higher because traders are not willing to sell, and we need to go higher to find bears willing to sell, to initiate shorts, and to find bulls willing to sell out of longs. So we'll probably get some sort of measured move up, and the probability is high, maybe 80, 85%, maybe even more, that the bulls get a second leg up after this rally. And look at this move down by the bears down to 39. Is this a major reversal? And look where we're testing. Probably not. To me, this looks like a minor reversal. Compare the rally to the sell-off, and the sell-off, a couple of different ways to look at it. Maybe 36 is leg 1, pullback, leg 2, pullback, leg 3 down to 39, or simply leg 1, 38, pullback, leg 2, 39. So 2 or 3 legs counter to the direction of a really strong bull breakout that's likely to get a second leg, testing the breakout point, 19 high, probably support here, and expect buyers and a second leg up. And we start to channel. So the breakout is the strongest part of the trend. We get a pullback and we convert into the channel phase. And here we go in the channel phase. Buy climax, pause, buy climax, pause. Getting a deeper pullback. Is this a major reversal? We still really haven't had a strong trendline break. This is enough selling pressure that we might be in a trading range at this point. Maybe the bulls get one more rally, but we know that channels evolve into trading ranges, and this is more selling pressure than the bulls want. The channel is not as strong as it could be, and think about the big picture. We are in a trading range in the big picture, so as strong as this rally was, again, the big picture is still a big trading range. And we ended up testing that breakout point once again. 48, 49 tried to break below, but failed. Strong reversal up to 53. Strong enough rally for a second leg. But we're in a trading range at this point. And what leg is bar 52, 53? might be leg 3. And you can say after 3 legs down, this resets the leg count to some degree. And even if it does, you have to expect a deeper pullback because of the context. We're in a channel at this point. 49 fell below 38, and this was a major higher low. So at this point, the market is either in a bear trend or a trading range. Then we break to a new high. So to me, this looks like an expanding triangle. 1, 2, 3, 4, 5 legs. So we have 5 legs in an expanding triangle, probably a trading range. 54, strong enough bear breakout, second leg down likely. Again, even though the rally is strong enough for a second leg, we may have to test all the way down to the bar 49 high. It's a bad buy signal bar, but we got a good breakout and follow through. So probably support at the 49 high if we test there. 54, bear breakout. And let me just pause for a moment and remind everybody, the purpose of markets is to find a fair price and to facilitate trading. And markets are always probing up and down, looking for a fair price. These are in the first few videos of the Brooks trading course. So if we think about that, the market is probing up and down, up and down, up and down. 54, does it look like traders are eager to buy when you get 54? Or does it look like we have to go lower to find buyers? 54, to me, it's telling traders that there's a magnet below that traders want to buy at. Bears want to buy back shorts lower, bulls want to buy to go long lower. So there's some agreement. We're in a trading range, traders want to buy low and sell high. So we get 54, you're about in the middle, maybe even the upper third of the trading range at this point. After 54, a leg 1 breakout that will probably get a second leg. So not ideal to look to buy here, but after 2 or 3 legs down, testing a breakout point, makes sense to buy at least for a scalp. And you can see the rally we got. 61 through 63 was strong enough for a second leg. However, what's the context? We're testing a breakout point, and we actually fell short by maybe a tick or so. And it's really important to not ignore the tails on bars. 61 rallied and pulled back into the close. 62 rallied, pulled back into the close. 63 rallied. It's a smaller bar. There's range compression. We're losing momentum, and it's a third push up. 1, 2, 3. This channel down was tight enough for a second leg. Also, if you think about the 15-minute chart, this is a series of 3 bars, 54, 57, 60, 3-bar bear micro channel. First reversal, probably minor, expect a second leg down. So the bulls broke a trend line, but we're probably going to retest these lows before the bulls get any sort of reversal. We broke below this low, tested lower in the range, but at this point, 1, pull back, maybe 2 legs down, pull back, maybe even 3, and it's a second leg, 1, pull back, 2, bottom of a trading range. We're back in the buy zone here. So market found support in this area after 2 or 3 legs down to the bottom of a trading range. We still had this breakout, and even though we went sideways, this was likely to get a second leg. Was this or this the second leg? It may be, but it also could be part of the correction or the trading range after the breakout. After the breakout, we're followed by a period of sideways trading, and then late in the day, the bulls got a more symmetrical second leg up here right up until the close. After a couple of legs sideways to down, you can call it a double bottom bull flag. Low in a trading range with a bull bias. It's a bull trading range day. We had a lower trading range, a bull breakout, and then an upper trading range. The majority of the day was spent going sideways. Lots of overlap and sideways here. Big up, big down. Lots of sideways over here. Big up, big down. So again, the majority of the day was a trading range day, even though on the daily chart bar, it will look like a bull bar opening near its low and closing near its high. This is the extended hours, the Globex session. So if we do this, see what I'm talking about. It's a bull trend bar. But when you look at the bar, you crack it open, look at the 5-minute chart, lots of trading range behavior. It's more of a broad bull channel. So that's it for this recap. Thanks everybody for watching, and I hope everyone has a great weekend.